Welcome to the Tradier Rundown. I am Jim Murio. That's Bob Iacchino. Together, the two of us are co-hosts of the critically acclaimed Tradier's Trader's Edge that comes out at 3 o'clock live Chicago time on Wednesdays. Please join us on that show. Robert, how are you?
Good. How you doing, Jimmy?
Good. So tell me this. Okay, today we're talking about utilities here on the Rundown. Now, utilities, if I'm correct, because I haven't traded them in a bit, they made all-time highs a couple weeks back, have been a little bit in the dumps since then. What is the utility trade right now, if you can make a fundamental argument for it? Is it rates are going down, which they're not? Obviously, 2-year and 10-year have gone through the roof since we started cutting rates. Rates could potentially go down and utilities dividends look better. Or is it just an energy play based on energy needs? Thoughts?
Well, I think longer term, it's an energy play. I think in the short term, there's actually a belief, and it's not you or me that necessarily believes it, that there could be quite a bit of volatility that comes with this election. And because they have guaranteed sales, energy utility companies, obviously they have long-term contracts. And because they pay a dividend, you know, the dividend is kind of, in my mind, it's a little bit overblown, because talking about the XLU, for example, which is the ETF we talk about in the rundown this week, has about a 2.72% dividend. I mean, that's good, but it's not the 10-year, which is sitting at about 424, 426 last I looked. So I think there's this idea that right now is a time where you could combine the upside of utilities based on AI with the higher dividend. So I think that's actually, it could be very attractive. It could be an attractive idea for people to do that are maybe a little later in their investing life.
So tell me this, when you just alluded to something, but I want to dig down a little deeper. You said something about potential volatility after the election. And again, last time Trump won in 2016, there was wild volatility after the election. This time, that time he was unknown. This time he's literally been president for 4 years. So this notion that everyone's saying of all the things, all the dastardly terrible things he's going to do seems kind of odd to me, considering he's been president. But anyway, were you implying that because some who aren't as smart as you and I, which to most everybody, right? Some aren't as smart as you and I. Do you hear me mutter, which is everybody? I was hoping.
I did hear that. I got that.
But anyway, they think there's going to be wild volatility, so they're parking themselves in something defensive. Is that the point you were making?
Yeah, I think the volatility is not necessarily what Donald Trump would do if he were president. I think there is some volatility for Kamala Harris if she were to become president, because I still think she's an unknown to a certain degree, even though she was vice president. I think it's more about society and what could happen, because you could see massive unrest. Now, I don't personally think that. Someone made a case to me. I said, well, I could play devil's advocate, but I don't think I'm going to. But if you believe in that, I mean, I recommend gold. I just think for people who are maybe 50 and older and have sort of been in aggressive stocks most of their lives, and that's obviously worked out. If you've been in tech, you could start shifting into utilities prior to things like what could be a socially nervous election, and get a dividend plus potentially some AI-driven upside. That's not been the case for utilities over the last 20 years.
So when you say AI, and I know what I'm thinking of that too, are you talking about electricity specifically? Yep. Are you talking about uranium companies?
Everything needs electricity. Well, let me rephrase that. Everything needs more electricity than we have available now going forward. AI, cloud storage, quantum computing, if it becomes a thing, electrification of the economy, maybe post-Trump, if it continues after that. So I just think electricity is becoming more and more valuable, and utilities is one way to play it.
So you think, again, this is just the last question. You think Trump is going to pull us back from the green new nonsense where everyone has to drive electric cars or cars powered on fairy dust? You think he backs off of that?
I do. I think he's going to surprise people and say that it's a good thing, but we should go at a measured pace. And to me, that measured pace is 30, 40 years, not 2025.
Hell yeah. That's the notion of people who don't trade these markets and don't understand implications of immediate dislocation and chaos in markets and how disruptive it can be. Change is great. Change at its own pace and at a good pace. Markets can get used to it. If you try to change things too quickly, bad things happen. It will happen in those energy markets too. This is Tradier's Rundown. I'm Jim Murio. That's Bob Iacchino. He always has a black t-shirt on because that's what his genetic Italian makeup tells him to wear every morning. We'll see you soon. Oh, join us, please, on Tradier's Rundown, on Tradier's The Trader's Edge, live at 3 p.m. Wednesdays.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.